All right, so welcome to your personalized deep dive.
Yeah,
Today we're tackling a pretty hot topic,
literally.
literally, California wildfires and what
Wow.
they mean for home insurance.
Need one.
You've probably seen the news about those fires ripping through LA,
Mhm.
but what you might not realize is this could make getting home insurance
Oh,
a
yeah.
whole lot tougher and pricier for Californians.
Especially in those fire-prone areas.
Exactly.
Yeah.
So we'll be digging into this AP News article.
Okay.
It's titled Los Angeles, How the Wildfires Could Affect California's Home Insurance Market.
Uh-huh.
See what's going
This
on
stuff good.
So,
It's a complex situation.
yeah,
And these recent fires really highlight the challenges facing homeowners and the insurance industry in California.
absolutely. So paint the picture for me.
Okay.
What exactly happened with these LA wildfires? What made them so destructive?
So these fires were wind-driven,
Okay.
which means they spread incredibly fast. They hit multiple areas, including Malibu,
Mm-hmm.
Pasadena, even in the Hollywood Hills.
Oh, God.
But Pacific Palisades was hit the hardest.
Yeah.
It's being called the most destructive fire in LA's history.
Oh, wow.
Homes, businesses, even a library, and some cultural landmarks
God.
completely gone.
It's just heartbreaking. I can't imagine the impact
Yeah,
on those people who have lost their homes and businesses.
for sure.
And you mentioned California already had a home insurance crisis.
Mm-hmm.
Were these fires the cause of that, or was something else going on?
The fires definitely don't help,
Yeah.
but California's insurance issues predate these events.
Okay.
The state was already struggling with a lot of insurers pulling back,
Oh, wow.
or even completely stopping new policies.
Really?
Yeah. In fact, by 2023, 7 of the 12 biggest insurers in California had either limited or paused new policies.
Wow, 7 out of 12. That's a huge
It's a lot.
chunk of the market. What's driving that?
I mean, there are a few factors,
Sure.
but a big one is climate change. We're seeing more frequent and severe wildfires,
Yeah.
and that means huge payouts for insurance companies.
Right.
They're facing colossal costs, and some are deciding the risk is too high.
Makes sense. But what happens if you need insurance and you can't get it through those traditional channels? What options are people left with?
That's where the FAIR Plan comes in.
Okay.
It's California's solution for those who can't get insurance anywhere else.
Okay.
But essentially, it's a state-backed safety net.
A safety net sounds reassuring, but
Huh.
I have a feeling it's not quite that simple.
Right.
Are there downsides to relying on the FAIR Plan?
You're right. It's definitely not ideal.
Okay.
The FAIR Plan has some serious limitations.
Like what?
The coverage is fairly basic,
Mm-hmm.
and it only goes up to $3 million.
Okay.
For a lot of homes in California, that's not enough to cover a total rebuild.
So even if you have insurance through the FAIR Plan, you could still end up paying a huge amount out of pocket if your home is destroyed.
Exactly. And on top of that, the FAIR Plan often only covers the actual cash value of what's lost, not the replacement cost.
Oh.
Let's say your home was built 10 years ago and is insured through the FAIR Plan.
Mm-hmm.
If it burns down, you might only get enough money to cover what that house was worth 10 years ago,
Oh, wow.
not what it would cost to rebuild it today.
That seems like a pretty significant difference, especially with construction costs constantly rising.
It is, and it's a big deal in California's expensive housing market.
Yeah.
Now, here's something that really puts the scale of this problem in perspective.
Okay.
Between 2020 and 2024, the number of FAIR Plan policies more than doubled,
Right.
reaching almost 452,000.
Gosh.
So even before these recent fires, a lot of people were already relying on this last resort option.
So it sounds like the FAIR Plan was already under a lot of strain.
Yeah.
And now, with all these new claims coming in from the LA fires, is there a risk it could go bankrupt? I mean, could it actually run out of money?
That's the million-dollar question.
Yeah.
And it's one that the article explores.
Okay.
Let's dive into how the FAIR Plan's finances work,
All right.
because it's a little complicated.
Okay, finance isn't my strongest suit,
Sure.
so feel free to break it down for me.
Imagine it like this.
Okay.
The FAIR Plan is like a potluck, where everyone brings a dish to share.
Okay.
Policyholders pay premiums,
Uh-huh.
which is like everyone putting money into the pot to cover the cost of the food.
Okay, so the pot is the money the FAIR Plan has to pay out claims.
Exactly. Now, if there were only a few people at the potluck,
Yeah.
there's plenty of food to go around.
Mm-hmm.
But if a lot of people show up unexpectedly, then that pot of money might not be enough for everyone.
So if the FAIR Plan is facing a sudden influx of claims, like from these LA wildfires, the potluck runs out of food and some people go hungry.
That's a great analogy, and that's where other insurance companies in California come in.
Okay.
They're required to chip in to add more food to the potluck if the FAIR plan can't cover all the claims.
So there's a backup system that makes sense, but does that mean those other insurers just have to accept the losses?
Not necessarily. This is where a new state rule comes into play.
Okay.
This rule lets insurance companies raise their rates to make up for any contributions they made to the FAIR plan.
Interesting. So they can essentially pass the cost on to their customers.
Right.
While I can see why that might be necessary to keep insurers from fleeing the state altogether, it does seem like it could put a real strain on homeowners who are already struggling with affordability.
Absolutely, it's a delicate balancing act.
Yeah.
The idea is to stabilize the market by enticing insurers to stay in California, but it could come at a cost for consumers.
It's like a ripple effect.
Yeah.
The fires create more claims, which could potentially lead to higher premiums for everyone. But before we get too lost in the financial weeds, the article mentioned that the FAIR plan feels confident they can handle the current influx of claims from these LA fires. How is that possible with all the destruction we've seen?
Well, according to the article, the FAIR plan has about $700 million in cash on hand, and they also have something called reinsurance, which is essentially insurance for insurance companies.
Okay.
They've got about $2.5 billion of that.
Wow, $2.5 billion in reinsurance. That's a pretty big safety net, even for an insurance company. But I guess with the scale of these fires, it's understandable why they need that much backup. So it sounds like the FAIR plan itself might weather the storm, at least financially speaking. But what about the individual homeowners who are insured through them? Are they going to be okay?
That's a really important point, and it's where things get complicated. Even if the FAIR plan avoids bankruptcy, the individuals with limited coverage through the FAIR plan may still be facing huge rebuilding costs.
Right.
Remember, they might only get the actual cash value of their homes, not what it would cost to rebuild them today, and that difference could be substantial.
So for those relying on the FAIR plan, the financial burden of rebuilding could be immense, even if the FAIR plan survives.
Precisely. It highlights the fact that there's a bigger picture here, beyond the solvency of the FAIR plan. It's about the financial resilience of individual homeowners and communities.
That makes sense. So it sounds like California is in a tough spot. They're trying to balance the needs of homeowners with the realities of a changing climate and a volatile insurance market. Are there any strategies they're using to navigate this situation?
They are trying different things. You'll recall we talked about that new rule allowing insurers to factor in climate change when setting rates.
Right, the one that could potentially lead to higher premiums. What else are they doing?
Another rule they're considering would let insurers pass on their reinsurance costs directly to consumers.
So potentially more costs passed on to homeowners. It seems like a lot of the solutions being considered could end up hurting the very people they're trying to protect. Makes me wonder, are there any positive developments, any signs that the situation might improve?
There is one glimmer of hope. The article mentions that Farmers, the second largest insurer in California, started writing new policies again last month.
Oh, interesting. That seems like it could be a good sign, right? Could that mean more competition in the market?
Potentially, it's too early to say for sure, but it could indicate that some insurers are seeing ways to manage the risks and are willing to re-engage with the California market. It'll be interesting to see if other insurers follow suit.
It certainly gives some reason for optimism, but even with farmers dipping their toes back, and the long-term implications of these fires are still pretty unsettling. What are your thoughts on that? What could this mean for the future of California's home insurance market and for Californians themselves?
It's definitely a complex situation with far-reaching consequences. It's like we're on a roller coaster and we've just hit a big drop. We know there are more twists and turns ahead, but we don't know exactly what they'll look like. One thing is certain, though, this crisis is forcing us to rethink how we live in a world increasingly impacted by climate change.
That's a good point. I think a lot of people see these fires as isolated events, but they're really part of a much larger trend. It makes me wonder if we're headed towards a scenario where only the super wealthy can afford to live in these beautiful but increasingly risky areas of California.
It's a valid concern,
It
and it brings up the issue of climate inequality. As these disasters become more frequent and severe, the cost of living in high-risk areas is likely to skyrocket, potentially pushing out those who can't keep up. And that raises questions about community resilience, social equity, and even climate migration.
It's a lot to process. So beyond the potential financial burdens, what other long-term impacts should we be thinking about?
Well, one area that stands out is the impact on cultural heritage. You remember the article mentioned that some cultural landmarks were destroyed in these recent fires?
Yes, that stuck with me. It's easy to get caught up in the dollar figures, but the loss of these landmarks represents a different kind of loss altogether.
Exactly. And while the article didn't delve into specifics about which landmarks were lost, it's important to remember that these structures often hold deep historical and cultural significance for communities. Their loss adds another layer of complexity to the rebuilding process.
It's a reminder that the impact of these fires goes far beyond the immediate physical damage. It's about cultural loss, emotional trauma, and the disruption of communities for years to come.
You're right, it's a multifaceted issue, and in part 3 of our deep dive, we'll explore those long-term implications in more detail. We'll talk about what the future might hold for California's home insurance market and what steps individuals and communities can take to navigate this evolving landscape.
Welcome back to our deep dive into California wildfires and the future of home insurance.
Yeah.
We've covered a lot of ground,
Mm-hmm.
from the immediate devastation of the LA fires to the ongoing insurance crisis and
Right.
the role of climate change.
Yeah.
It's clear this isn't just about dollars and cents. It's about people's lives and the future of communities.
Yeah. Yeah, it's a big one.
So we've talked about the potential for rising insurance costs,
Right.
the limitations of the FAIR plan,
Mm-hmm.
and even the possibility of climate migration.
Yeah.
Now I think it's time we zoom out a little bit
Okay.
and consider the long-term psychological impact of all
The
this.
human impact.
Yeah, what kind of emotional toll does living under this constant threat of wildfires have on people?
Well, I mean,
Yeah.
the trauma of losing a home,
Mm-hmm.
the fear of future fires,
I'm right.
the uncertainty of what tomorrow holds.
Yeah.
These are very real
Yeah.
and very powerful forces.
Yeah.
It's not just about rebuilding structures. It's
Mhm.
about rebuilding lives and communities
Right.
that have been deeply affected by these events.
I imagine it also creates a sense of vulnerability
Mhm.
and anxiety for those living in fire-prone areas.
For sure.
Knowing that your memories, your entire life,
Yeah,
could be wiped out in an instant
right.
must be incredibly stressful.
Absolutely. And that stress
Yeah.
can have ripple effects
Mm-hmm.
throughout the community.
Yeah.
Can impact people's mental health,
Yeah.
their relationships, their sense of belonging.
Yeah.
It can even lead to a sense of hopelessness and resignation.
It's almost like a collective trauma that the community has to grapple with
Right.
on top of the individual losses people have suffered.
Exactly. And it's a reminder that the recovery process goes far beyond simply rebuilding homes and businesses.
Yeah.
It's about addressing the emotional and psychological needs of individuals and communities as well.
Right, so we've got these huge challenges ahead,
Yeah.
rising costs,
Mhm.
climate change, and these psychological impacts that we've discussed.
Right.
It can feel a bit overwhelming.
It is.
What can we do as individuals and as a society to create a more resilient future?
Well, I think it starts with awareness and understanding.
Okay.
The more we know about the risks and the challenges,
Mm-hmm.
the better equipped we are to make informed decisions
Yeah.
and take meaningful action.
So knowledge is power, as they say.
Yeah. Exactly. And from there, it's about taking steps to mitigate our own personal risk.
Okay.
That could mean things like
Yeah.
creating defensible space around our homes,
Mm-hmm.
choosing fire-resistant building materials, or even working with our communities
Right.
to develop more comprehensive wildfire prevention plans.
Those are all great steps, but they also sound like things that require a certain level of resources and know-how. What about people who might not have the time or the money or the
Yeah.
expertise to take those kinds of actions?
That's a crucial point,
Mm-hmm.
and it highlights the importance of collective action and social responsibility.
Right.
We need policies and programs that support vulnerable communities,
Yeah.
provide access to resources and education, and ensure that everyone has the opportunity to protect themselves and their homes.
So it's not just about individual preparedness.
Right.
It's about creating a system
Yeah,
that supports resilience at all levels of society.
precisely. And that means advocating for policies that promote sustainable development, invest in renewable energy,
Mm-hmm.
and address the root causes of climate change.
That's a big task, but it feels essential if we want to avoid a future
It
where these wildfires and insurance crises just become the norm.
is a big task,
Yeah.
but I believe it's one we can tackle if we work together.
Right.
Remember, we're all in this together.
Yeah.
The choices we make today will shape the California of tomorrow.
That's a powerful message to end on. So for those of you listening, remember that while this deep dive has provided a glimpse into this complex world of wildfires and insurance, It's just the beginning. Keep asking questions and keep engaging with this issue because, as we've seen, the future of California depends on it.